Hello guys and welcome to Hakman Traders. In this video I'll be showing to you guys how would you average a stock. So averaging is a great strategy, a great concept to use in the stock market. By averaging a stock, it provides you a great opportunity, a great entry point from which you can buy the stock at a lowest price and then sell the same stock at a highest price. So this is the concept of using the averaging technique. So let me show you how would you average a certain stock. Now let's say you bought the stock at this point and then the stock price decreased in value, and again you've bought double the stock. You've let's say you bought 100 shares at this point and then you bought 200 shares. So your overall price would decrease in value. So will decrease so far in value that the lowest price would be powerful, and then from that point you will and from that point you will the buying price will decrease in the lowest price will decrease in favor of the lowest price. So it will by far it will come down more below, and then you will have a great opportunity from that point to enter a certain. Let me show you what I mean right here. So at this point, so let me show you at this point. So now let's say a stock is about $100 and you bought 100 shares at this point, at this level. So let's say the stock price decreases in value. This value decreases, and let's say it reaches up till $80. I would say it's $1 price. So let's say it I will take one share, and let's say you bought two shares at this point, so it is equal to 160. So now let's calculate it. By now 100 plus 160 equal to divided by 2 no, sorry, I did it wrong. 100 plus 160 equal to divided by, I would say, I guess this is 103, 86.66. This would be the total price at which you bought the share. So from $100 and $80, actually what I mean right here is the stock would come in between the buying power. The buying price would come in between the two prices, the highest price and the lowest price. So the buying price would come in between these. So let you bought one share at $100 and two share at $80. So the buying price would decrease in favor of this. And generally I mean right here that the more you buy at the lowest price, the more this price would decrease in value. This price would be in this favor. So this is what I mean right here. Now let's say if you bought three shares at this stock, so that would be 240. 100 plus 240 equal to divided by 4, so it would be 85. Now let's go more in detail. Now let's say you bought 5 shares at this point, or let's say yes, 5 would be enough. So 80 multiply 5 equal to, that's 400. 400 plus 100 equal to 500 divided by, I would say 6, 83.33. So the more you buy at this point, the more this price would decrease in value. So generally it's all about buying this price, buying at this price more and selling at a higher price. So generally it is that when you buy a stock at this point and then you buy one share at this point and 10 shares at this point, so this the overall buying price which comes in between would decrease in this favor, in the favor of the lowest price, because you buy more stocks at this point, and then from this point it will give you a greater position and a greater opportunity, and a greater entry point and position from which you can have, and then the stock will increase in value and you can sell the stock for an even higher price. So that's the point right here, that buying the stock at a lowest price and then selling it at a much higher price. So this is the main theory right here that I'm trying to explain to you guys, because you can see Now I bought this stock, particularly this stock, at this point. So generally you can see how far it came below, and then I bought the stock at points like these, at these points. So now my overall buying price would in this case is 18.16, and then it is now closed at 18.20. So now you can see it recently crossed the resistance level, and let's see what happens next as the stock increases in value, or how the stock performs in this case. So it all depends upon the stock, of how how the traders are treating this certain stock. So generally, what I was trying to explain, I've explained my concept right here of how the averaging technique works. Now, up till this point, you can use the same technique in when you're you can use the same technique while the stock when you're trying to short a certain stock. So you can use the same as well. And for shorting a stock, I think that I guess that the stock price, no, let's consider here. Now let's say if you let's do this together, because I haven't applied this to shorting a position. Now let's say you have short a stock at this level. Now if you bought at this point, the stock price would come the shorting price at which you have short your position would come down right here. So it's generally a bad idea not to short your stock, not to do averaging while you're shorting your position. Do not apply the averaging method while you're shorting your position. Apply it before you have short your position. In just as in this case, when you're about to short your position, apply have lot size, a greater lot size, from which you can have a greater opportunity to from which you have a greater a great more from which you have more chances of making more profit. So try to do that when you are so do not apply this in the short. Do not apply the concept of averaging in while you're shorting your position, because shorting is when you apply it to short, you will you will have less profits and more losses. So do not apply this into the shorting short concept, short selling. So, and that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market or the forex market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.